Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. Well, something's wrong with my YouTube here. I think we're okay. You can see, you can hear me, right? I can see. Well, let's just come over here. I'm gonna double check it really quick because I did not actually click the go live button. Well, it says that I'm live. Actually, you know, I'm gonna try it from a different browser. Actually, is it YouTube's being sketchy? YouTube is being sketchy here. Put some music on here. Okay, no, I think we're okay. All right. Well, anyways, kind of got a weird market going on today here. So let's come. I'll make sure I got my news squawk going here and everything, and we'll come over to the charts. Okay, so the treasuries had another spike up overnight, almost erasing all of that downside that we had yesterday. Man, after we left it went a pretty good clip lower. And now here this morning, we're getting another short impetus. But there was a lot going on last night. Like European markets, they went up and they went down. So I'm not 100% sure where we go with the S&P 500 here. You can see also a big dip and back. So we had like some economic news in Europe that was bad and some economic numbers in Europe that were good, and so kind of flipped around and kind of leaves me in a I'm not quite sure what to do with this kind of a position. In oil is actually recovered yesterday's selling, which, man, it was ugly yesterday, and now they're up and they're higher, which is like, what? Okay. Oil's getting a little bit wild over there. Natural gas is just continuing to press up. And gold and silver getting hammered by the dollar. Oh man, are they getting hammered by the dollar. Copper's doing okay though. That's good. So, yeah, Bitcoin. Well, that's actually not too bad. I mean, 2 days ago we had that drop, right? We're still just kind of languishing in the 2100 area. I'm really concerned about if cryptocurrencies has another drop. And what could drive that? Well, look at it. Now we're at 109. Can you believe that? How is the dollar so effing strong? It's crazy. It really is. Like, what is? But the thing that's going on is there is a real serious concerns about Europe right now. So, okay, they are really moving here. Oh, okay, so there we just got news. Oh, did I miss it? Wait. I'm a little confused here. Let me make sure I got this all right. Did I feel like I had something wrong? Today's the 23rd. Now, I don't have anything slated for the bottom of the hour, but when I see Forex Factory is saying negative 3.7 versus spot 1 for the Philly Fed Manufacturing Index. Was that today? Then my news squawk? Nah, they must, where are they getting that from? I don't know what they're tweeting about that for. Oh, that must be later. Is that later? Well, we got Flash Services, New Home Sales, Richmond, Fed Composite, New Home Sales change. We have some numbers later today. That doesn't explain why they're tweeting about this. Okay, well, whatever. It looks like it's moving on some news to me. To me, it looks like it's moving on some news, but I'm not sure what it is. But that was some strong short flow. I cannot be clicking it there. No, sir. And I have to just spectate. .063. That's kind of looking to me like the 2-year is destined for 3.5 now, huh? Getting a big sell in the Japanese yen and in the treasuries and gold. S&P 500 selling a little bit, reacting a little bit. Man, that says something's not right. I'm missing something. What am I doing wrong here, guys? Interesting. Ooh. We got an interesting post here by Jean-Philippe. Oh, I like this. I'll just read it. How much of the recent market rally is explained by trend following quant funds? A recent Financial Times article suggests their contribution is substantial. The order-driven theory of price moves, aka the inelastic market hypothesis, provides a ballpark estimate. Money flowing into the US stock market from quant funds since June is estimated in the Financial Times paper to be around 100 billion. This must be compared to a total market cap of 50 trillion. From the GABIEX and Koigen and mine, the mechanical impact of these 100 billion should be a $500 billion increase in total market cap, i.e. 1%, to be compared to an actual increase of around 14%, 7 trillion, since mid-June, because of the multiplier. From my interpretation of GK's multiplier of 5, one should, however, account for the significant transient impact effects. The impact of flows is quite a bit larger on the short run before decaying to the medium-term multiplier value of 5. A reasonable estimate is that over 2 months, a constant inflow of money adding up to 100 billion could have impacted prices by 2 to 3% max, i.e. only a fifth of the observed 14% rally. So, well, my conclusion is that whereas quant funds did contribute, but other deep pockets must have been pouring in money as well. After all, many investors unwittingly act as trend followers as well. Such a behavior is so entrenched in the human psyche that it's hard to avoid it. 2 final remarks. If the inflow of quant funds were to continue at the same pace in the next 2 months, market prices should add another 2 to 3%. If, on the other hand, flows were to come to a halt, relaxation of market impact would bring prices down by 1 to 2%. Typical volatility of the market is 20% annually, 8% in 2 months. A rally of 14% is not even a 2 sigma event, so one should perhaps refrain from over-interpreting puny 1 to 2% effects. Even calling 14% a rally is borderline significant. Okay, well, I saw a story about this on Zero Hedge yesterday. Let's go find this. The Fed can't stop supply-side inflation. Yeah, Twitter tumbles after whistleblower reveals company hit extreme egregious deficiencies. Yeah. Okay, let's see here. Here's the zero hedge story. Whereas the past 3 days have seen a historic bloodbath among meme stocks such as GME, AMC, and especially Bed Bath & Beyond, which saw 60% of its market impact erased in the 3-day period as Ryan Cohen pulled one of the greatest ever pump and dump schemes in a company, which is now set for bankruptcy. The sour mood is a stark reversal of the seemingly relentless retail buying which supported the rally's momentum. But while we focus on the latest bursting of the meme stock bubble in a subsequent post, for now we are more interested in what happened during the bubble expansion phase, if for no other reason than to know what to expect the next time the Wall Street Bets crowd inevitably crowds into a handful of quasi-insolvent, high-beta trash names. As Vanna Research writes, retail investors purchased on average $1.36 billion a day worth of U.S. securities in the week through last Wednesday, just before RC Ventures published its 144 warning it was about to dump its entire BBBY stake. While most purchases remained concentrated, a few tech companies, here Tesla is once again dominant, Vanna observed signs of a rotation back to ETFs as earnings season comes to a close. This also provided fewer opportunities for retail speculators to make a quick intraday gains on earnings announcements. The Wall Street Bets community also ramped up their participation as seen by a dramatic increase in out-of-the-money call and cash buying of meme stocks to spark gamma squeezes, further supporting the current upward trend in U.S. equities. But what about the bigger question? Does retail buying have an impact on the broader market? After all, skeptics have said that it is laughable to blame the meme stock melt-up on mom-and-pop investors when it is really hedge funds behind all the notable meme stock moves. Well, according to Vanda, the answer is yes. In the days before the bubble burst, the research service notes the S&P 500 had jumped significantly during the U.S. morning cash trading session, a sign of retail investors' ability to boost markets. Its high-frequency data suggests that retail crowds were buying aggressively at the open recently, and similar to August of 2020 when SoftBank single-handedly orchestrated a similar melt-up targeting a handful of tech stocks. This August's low liquidity and subdued engagement from professional investors amplified the impact of retail cash buying, even as the latter's activity waned throughout the rest of the day. It's also why Vanna warned that equities may see more of a tug and pull late August and September when most institutional investors return from their summer break, although the pull came much sooner, courtesy of Ryan Cohen's rug pull. An alternative VannaTrack data set shows rising engagement in social media platforms, but while retail call option volumes have picked up but are below previous peaks, while speculative activity is far from the early 2021 peak, which was fueled by the latest round of stimmies, the increase in social media chatter is experiencing exponential growth. Increasingly, broad call trading volumes have jumped. Still, they've remained subdued relative to previous speculative bouts, a sign that not all retail investors are yellowing into some of these meme stocks. Nevertheless, Vanna warns that while this phenomenon may carry on as market action remains benign near term, the strong positive momentum in meme stocks is typically unsustainable in a long-term bear market. Indeed, retracements tend to be brutal, and we doubt the average investor can sustain that much more P&L pain in 2022. The warning proved prudent, with the meme stocks suffering blistering losses in the last 2 to 3 days. If retail impacts the entire S&P 500, it surely also influences cryptos, and sure enough, Vanna notes that crypto land continues to keep investors on their toes, though trading activity shows investors are participating in nuanced ways. Earlier in August, Coinbase and BlackRock agreed to partner up to provide Aladdin clients access to crypto trading and custody via Coinbase Prime. Partnership would open the doors of crypto to a much broader set of institutional investors. Retail crowds did not miss the chance to gobble up a significant amount of coin shares on the news, but as the chart below shows, upbeat sentiment in this particular name has lost some momentum. Meanwhile, crypto investors remain focused on the impending ETH merge, now scheduled on for the 15th of September, following the latest successful testnet developments. Blah, 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 blah. A successful deployment could potentially see retail appetite for coin return more substantially, Vanna concludes. There are definitely people trying to pump Coinbase, but I want nothing to do with it, because they're diluting their equity. So everybody's like, oh, they're trading below book, but it's not. Okay, so they linked to Vanna Research, but they didn't actually say what they were. I was sitting there like, do I really need to blow my nose? I don't want to blow my nose. But yeah, I really did. There was stuff up there. And how much money were they talking about here? Well, that's trivial. They is estimated to be around 100 billion. Interesting. Do you trade options? Not currently. I mean, I've taken a few options trades. I've made some okay money from options in the past, but it's difficult. By the way, good morning, Ish. I don't know what you're saying about all fine and in order, but it's good to see you here. Was that like kind of sitting here was like unsure if anybody was watching just because like the way that the stream started was weird and there wasn't any viewers at the beginning like there usually was. I was like, am I even actually live? But now you guys are talking and I'm like, okay, we're good. Everything's okay. Everything's okay, folks. You like the background music? Cool. Well, I am happy that I decided to not touch this market after seeing that very strong down impulsive move without really being able to decipher what the driver behind that move was. Again, I keep seeing live squawk. I'm seeing the squawks talk about Philadelphia Fed non-manufacturing index for August negative 3.7 versus a previous 0.1. And when I come over to like my financial juice, I don't see anything listed for that time for the bottom of the hour. And if I go to Forex Factory, I don't see anything listed. Do I have it filtered out or something? I don't. I don't have anything on the calendar today until 7:45, which is just flash services PMIs and Richmond Manufacturing Index at 8 o'clock. So what's going on there? Seems like they were reacting to a news release, but I don't have it. And I just can't imagine Philly Fed non-manufacturing index. It's not even listed having that strong a move. So hold on a second, Sebastian, to talk about options here. I want to finish writing this thing here. Okay, so with the options market, Sebastian, here's the deal with the options market. The number that they're offering you in the options market always sucks balls. So if I'm a market maker, right, and I'm offering a spread, I'm gonna place my best bid and offer in places where I have an advantage, right? Especially down in here, like look at these 5-year. Well, the 5-year is a lot better today, but like look, it's a 10 tick spread, right? He's offering a really wide spread to account for the lack of volume in here, right? If you're gonna bid at like 3.18, you know, they want it to be like the only people that are hitting you are like really desperate or stupid, right? And options are very much like that. Like they're very often illiquid and so forth. So the first thing is that if you're gonna trade options, I would highly recommend, not highly recommend. Listen, I'm not an expert on options, but when I trade options, I'm looking for the more active strikes. I'm looking for strikes that have volume because I don't want to deal with getting a super crappy price, right? And that's a big problem. They put all of this trading that goes in options. A lot of it has to do with just making a book and being, you know, having an edge and being able to calculate what the volatility is and so forth, right? So really the options market is, I mean, all markets are kind of skewed against you to some degree, but the options market is very, very much skewed against you. And that is just like when it comes to like, if you're trading the noise, right? If you're just trying to use technical analysis or something to trade it, right? Yeah, you're going to have problems in the options market. But if you know something, of course, don't trade on private information. But if you have information that the market has not properly priced in, public knowledge that the market has not properly priced in, then you can have a considerable advantage in options. So for instance, the trade that I made earlier this year was I knew that oil supply was constrained and it wasn't being reflected in the markets yet. So I made a play with some options in USO oil fund, and I made a ton of money off of that trade. So, right, you can play it, but I think, as always, it's like you need to be informed, right? Treasury options seem illiquid. It would be nice to set up a strategy with them, with their futures. I just think if you're gonna play that game, you're probably gonna want to be a quant, right? So for like what we're doing, discretionary trading, I'm not sure that options is always the best choice. If you were on the floor, that's different, but I guess if you're doing treasury options, because they are quite liquid, there might be some things you could get away with, but I don't really know of any strategies that are let's say in that direction. Okay, so we are about to get another data release here, I guess. Oh, that's the red book. Well, yesterday the liquidity was looking a little bit better, and I said maybe they're coming back from the summer and everything, right? But today it's down again. Now let's see if the S&P 500 opens, if it changes again. I could use another 2 to 3% down move in the S&P. Oh, come on. Haven't you guys done enough? They're looking pretty sad there in the treasuries. Not sure I can make a call here though. So one thing I am seeing is significant steepening. 30-year going lower, but not the 5-year. But the overall flows aren't making much sense to me. Like almost all of them look like a buy in the recent past, but they are moving down. So in terms of me looking for like autocorrelated order flow and signs of large meta order selling, we are moving down, but I don't think that I have the evidence to support a trade. Not to mention that I don't really have a bias, like something that's telling me that we're going to be going down for the day. ZB at lows and ZF near, well, ZF's not near highs, but it's about halfway, but it's still a pretty massive divergence, isn't it? But yes, it is, the yield curve is steepening out considerably. Like if we say that the 2-year is at 3.4 and this is at 3.6, so now we're at 26 basis points, and it was earlier, it was like 35 basis point spread, right? So the yield curve is, this inverted yield curve is evening out at least a little bit. How are futures different from options? Well, I mean, in practical terms, the big thing about futures is that they're extremely thick and the spreads are extremely small, right? So I can come here in treasuries. Usually there's about 1,000 contracts on each side, and the spread is only 1 tick, the minimum tick size, right? You get into options, And, you know, the spread between your best bid and your best ask is going to be at least like 5 cents, right? It's enough. It's enough that for scalping, it kind of makes it unsuitable for that. Okay. Mm-hmm. Any idea on cumulative delta convergence? UB converges with cumulative delta, but ZN not. That's exactly what. Okay, so hold on a second. Okay, so when I come over here to the treasuries, right? One of the reasons why I have these charts over here is because I want to see the changes in the cumulative delta between all of the different instruments, right? So you see here, like all of them through this range here are going up, right? Now, more recently, they've all come down. So there is a divergence between the cumulative delta and the price to some extent, right? But you can also very clearly see that the order flow in the 30-year is much more of a sell than it is in the 5-year, right? And so what should we expect the yield curve to be doing based on those flows? We should expect to see it steepening because they're buying the 5 years and they're selling the 30 years. And sure enough, when you look at the data series down on the bottom, these ones down on the bottom, what are they doing? They're steepening. Chart going up, steepening. So we are seeing a steepener. And that is what I would expect to see if the market is starting to price in that interest rates are going to stay higher for longer. As I would be seeing those longer term yields kind of rise up a little bit. What does steepening mean for forecast? Well, so unfortunately, I can't come in and say it's steepening, so that means that we're going to move down or we're going to move up. It doesn't work that way. One thing that we need to do is I'm watching the DOM here, right? I'm coming in and I see some large iceberg bid in the 5-year and I see order flow pushing it up, right? If I was only watching the 5-year, if I was only watching the order flow on the 5-year, I might be thinking, oh man, they're pumping up for a reversal. They want to go to the highs of the day, right? I mean, that's what Octavius is pointing out there. CF near highs. Well, it's not near highs, but it looks like that's where it's headed, isn't it? But that's not what the 30-year is doing, right? And the 30-year dragged them all down. So you have to be able to watch the order flow of all three to really understand what's going on and what the direction is. And even beyond that, just remember that past market information, past market generated data is not very effective at predicting future market generated data. But there is a strong correlation in order flow sign, which is to say that if they're selling them, those flows are likely to continue selling overall, but price may not follow that completely, right? So here, because I don't have a fundamental reason to think that the treasuries are going to go down, I think that overall this week we want to go down. I think that heading into Jackson Hole, that the treasuries are likely to be bearish going all the way into it. But we had a pretty aggressive sell earlier. I don't know what was behind that. And that's kind of why I'm staying out right now. Okay. But if we do want to take a short, you know, I'm going to be watching that because I know that the order flow, it looks like it's a sell at the moment, but the price isn't going to completely follow that. So I'm going to be looking for an area of like low liquidity where I might be able to, you know, get a more advantageous price, relatively speaking, right? Like I should be able to catch some sort of a pullback. Now in this situation, okay, so if we were going to get a pullback, where would we get it? Maybe at 18. But I think in this situation, it doesn't really work because one, I don't have any signs of a strong liquidity hole here that would give us that sort of rotation. So essentially, I'm looking for an area where where the latent liquidity is kind of low. It could be there at 16.5. Not too sure yet. You know, I want to see it go back and forth several times and nobody ever really offering up much liquidity either side, right? But then the other thing is there's these big offers that got plumped on it at 17 and 17.5, which is a little seems a little unnecessary, right? You can buy and sell futures the same way as soon as your 20-30% profit also cut losses. Yeah, well, I mean, in futures, holy shit. Okay. So there was a very impulsive move just there at 15.5. Seeing some volume trade at 15, that could create a liquidity hole. So I'm gonna... That was like 3 ticks all at once. That was like 3 ticks all at once, man. The more I research, the more I feel I'm gambling. Yeah. I understand that sentiment-ish. So here's the solution. Don't gamble. Only do something if you have something that really strongly indicates what direction it's going to go. Like, don't come in and say, based on past patterns, when this X thing happens, there's an X% chance of it going this way. Listen, I've done all that like a long time, and I have a lot of videos on this channel show you how to program that sort of stuff. But like, if you can go in, you can set a trade with a set target and stop that are equal to each other, and you can get that trade to work out more than 55% of the time, come tell me, we'll start a fund. It's incredibly hard. I'm not sure if they exist anymore, to be honest. But if the Federal Reserve just said something, that's going to have a direct impact, right? That's going to directly trigger orders to go a certain way, and we might be able to trade on it faster than other people, and that's where we have an advantage, right? So I'm only going to trade when I know something that I know is going to trigger orders and that I'm ahead of it. Yep, I'm seeing it there at 15.5. 15.5 and 16. With the way that ran, though, somebody must have been puking there. Somebody must have been puking there. Man, it sure was in the 30-year. That move down sure was ugly. If I had kept on my trade from yesterday, I didn't want to deal with it all day, but if I had kept on that trade and I was still in it, that would have been plus 90 bucks now. Probably, like in that one, the thing that was so frustrating about it to me yesterday was that I saw that it was possibly an opportunity to try and swing it, but I knew that the timing and everything of it wasn't right for me. us. It was a frustrating trade yesterday, wasn't it? So we were in that for almost 2 hours and we didn't get very much, but it did eventually go. Wow, 3,800 traded at 15. There's definitely more absorption in the treasuries here in the 15 area. You gotta be careful with that one though, because, you know, it looks like there's some pretty strong sell order flow there. They could very easily bust through this. There's some big pieces of liquidity down below us too in like the 12s. Kind of a little bit of a unique setup today, I think, but I think that this 15 is probably going to be a stumbling block for a little bit. Val, how are you doing? Welcome back. Uptick. Yep. Is it a little bit loud? That one seems a little bit loud, huh? There we go. Sorry about that. So I come over and looked at the meter and I'm like, oh yeah, that is actually like way loud compared to what it usually is. So I was right there with this impulsive flow coming through here, creating quite a liquidity hole. But price seems very depressed though. I'm a little concerned that we're getting similar to what we had yesterday, where the trend is definitely down and it's going to go, but you know, there's enough people involved that it doesn't really go anywhere until like much later. I'm seeing oil making another push higher here at the moment. They're breaching into 92.2. And I'm wondering if that, you know, we did see some correlation with oil yesterday. I'm wondering if that could cause a little bit more pressure in the treasuries. Still, it's going to be hard. There's still actually icebergs in this area too. Like, this is really gonna, I think the amount of volume that's traded here so quickly, it really is going to create a hole. That doesn't mean that there's not going to be like another leg down. It's just like there's going to be it's going to be more difficult. It's going to get sucked back up. What is the front month? I'm on October right now. Yeah. That's what Ninja Trader has me on, at least. So speaking tactically at this point now, we do have enough auto correlated order flow, and this, especially since we had a little bit of drama there, that I think we could justify a short trade, but we want to time it right. And from a timing perspective, I don't think that I'm wanting to come in and get something until maybe 15 to 30 minutes after the S&P 500 has opened. That big drop happened like at the top of the hour, so 45 minutes from that. Best trades are mid-morning. When I look at my stats about like what time of days do I make and lose the most, it changes over time and it's mixed. Not sure why everyone thinks the open is. Well, the open has the most volume. So the issue is there is more opportunity in the opening range. It's just that your ability to actually predict something within that area might not be very good. Low volume creates trend days? Not necessarily what I was getting at. So what I'm saying is orders move markets. The period of highest volume is at the open, and that tends to be when you see the most range, the most volatility. It's the open and the close of the S&P 500. A little bit different in the treasuries. Sure enough, this is a decent pullback. Actually, 17.5. 17.5 is maybe a little bit too far. I'm surprised they come back that far, that fast. But the timing's bad, right? So I'm not going to touch it. I'm getting a sign that whack might be going off again today. Let's see. Yeah, 17.5 right back to 16 pretty quick. Well, I ain't seeing anything this morning, although I don't think that they're showing me overnight data, so it might pop off when they start. But the DWAC stock is not so hot. It's in the lower, and obviously it's not below like where it started at 10, of course, but 29.95, whereas it's been around 40-50 most of the time. I suppose that if you still believed in the stock, which I'm not convinced that what was the name of the guy they put in charge of it, that they actually have good management. But if you did believe it, I suppose that's okay price to get into it. Especially if like they open the day at 30 and then there's going to be like a pop off or something. Not sure that's what's going to happen. Close a couple of tabs I have open here for no reason. Back up to 17.5. Actually, the 5-year breaking a new high there. European power prices smashed records in another inflation blow, reports Bloomberg. Rates rose to records in UK, France, Germany, Italy, and Nordic region. Prices 7 times higher than a year ago when prices had already risen far above longer-term average. I'm still a little fuzzy. Still a little fuzzy about the liquidity situation. What I see is a lot of resting liquidity down below us and things being pretty light close to it and continuing to be light above us. I'm a little concerned that you do have a recipe for a reversal. I'm not necessarily seeing, well, we could be seeing a large meta order going long. You gotta be careful because it's gonna be easier for those guys to go long. I put it this way, probably your potential reward in going long here is not too bad. It just feels like a very extra peaceful, quiet morning today. I'm trying to think if I took my medication this morning, so something feels off. Don't think I did. It's a little bit too late for that. But let's just not take any traits. Huh? $17. So you notice, I don't see a whole lot stopping them from touching 17.5, or blowing through it rather. Okay, so see there, they upticked. It didn't take very much, right? 18. They probably could clear that one really easily too. Like I am not seeing anything standing in their way, but the buyers just aren't really coming through. Yeah. You can see a lot of volume around. Wow. The volume in the treasury isn't as good as it was yesterday. Not that the volume was great yesterday. It was a little, but yesterday, you know, we had moved like a good 30,000, right? This one, the pullback has maybe been 5,000 contracts. I should clear these. I'm gonna clear my DOMs here so that we can see, since we're kind of retracing areas. But you're right, we do have some numbers like in 30 minutes, 15 minutes. Those services PMIs, those are going to be important. This is bothering me now because I really don't think I took my ADHD medications this morning. words aren't coming out quite as quickly, right? That's one of the ways that I notice. I'm not as eloquent. Man, there's some decent buying volume in the 5-year. Ultimately sold there though. So this is one of those times where it's like I want to do more. I want to add more. What is it that I can be doing to gain an advantage here? But I think that this is a point where I just have to be patient, right? Now that's an interesting thing. So I've been thinking a lot lately about excellence. Excellence is a value that I am worried is becoming severely underappreciated by the younger generations. I dare say I think that excellence is under attack. I see a lot of people saying that excellence isn't what matters. That we should that equality is more important than excellence, for instance. Oh, you're never gonna get equality. That doesn't make much sense. Listen, if you want to raise people out of poverty, if you want people's lives to be better, practice excellence. That's what I think. Or is this one thing? So something that's been going around on social media lately. Have you heard about this whole thing about quiet quitting? Right? So I find this one really weird. It's another one of those things where I think that the way that people react to it might say a lot more about themselves and their worldview than the reality. So it seems to me that a lot of it was just like, I'm not going to quit the job. I'm going to continue to get paid, but I'm going to like do like the bare minimum and not really add any value to the company that I'm working for. And until they actually fire me is basically what they're doing. A lot of people are turning it into like, well, this is just, you're just setting boundaries and having a work-life balance and things like that. Now, I don't think that's the way that it started. I think the people that started this were really saying, was not just about work-life balance. Okay. It's what it's really about. It's an abandonment of excellence is what it is. It's an abandonment of excellence. Here's the problem with that kind of an approach. Okay. You think you're just going to be able to turn it on anytime? Right? Excellence isn't something that you just all of a sudden, when it matters, you flip a switch and you can be excellent. It doesn't work that way, right? Excellence is something that you practice every day, right? The way that you achieve excellence is by looking in your daily life and always thinking, if I'm going to do something, how can I do it the best that I can possibly do? If I'm in a task, what is something that I can do to make my execution of this task just that much more awesome? That's excellence, right? You have to do that every day. You can't just turn it on. But everybody seems to be acting like they think they can just turn it on, or that they just don't need it. Well, I can just live on the salary that I'm getting and just browse the internet all day. And as long as they don't care enough to fire me, it's okay. Nah, because you're not practicing excellence. You're never gonna reach your full potential. Right? I think that if you look at this stream, what makes us different? Obviously, I'm an expert in market microstructure and order flow, right? But I think that what really makes this stream difference is being built on principles and values, right? Excellence, integrity, teamwork. Those are the three main values of this stream. Yeah? You guys believe that? Do you see that, right? When I say something here on this stream, people know that I go to extreme lengths to ensure that what I'm saying is accurate. I take my reputation very seriously. There are people out there that want to give opportunities, and I tell them no, because I'm not 100% sure that they actually have the integrity that I demand from my partners, right? I don't come in here and tell you, oh, you guys are going to make rich. You guys are going to get rich. Here are all of the people that we've had. They've gotten rich, and you're going to get rich too. No, I don't think that that's integrity. You come in and you say that stuff, right? And it's clickbait. That's what everybody does. That's what everybody does. The stream could be a lot more popular to do that, but I don't do that. Why? Because integrity matters, right? And part of the integrity here is that you've got to tell people, you got to warn them that most people lose money day trading, right? That's our obligation, is with integrity, right? Excellence. We're going to come in. You come here. I'm going to teach you excellence. Okay. We trade with the DOM. Why do we trade with the DOM? It's the hardest way to trade. It's the best way to trade. Yeah, it requires work. Excellence means doing something better than you have to do it. It means sometimes putting extra effort into something, even though nothing is really going to come out of that extra effort. But why do you do that? So that you can constantly be your best, because excellence, you have to practice it every day. So you can't come in and say, well, I don't really need excellence today. I don't really need to pay attention to what the news is and do all of my research and due diligence today. I can just kind of wing it. No, you always got to do your best. The DOM requires a lot of work, but it is the most excellent way to trade. Something I've been doing more recently, Vim. Vim is the most excellent way to edit text, right? It's the hardest way to edit text. You got to remember a bunch of keybinds. You kind of have to change the way that you edit and be a little bit more intentional about how you're writing things and rewriting things. But it is the most excellent way to edit text. And if you get good at it, you can edit text faster than other people because of that, right? That's excellence. That's what you get here on this stream. That's not what you're hearing everywhere else, is it? Right? What does everybody else say? Well, just put in the minimum effort and get rich from social media or something. Yeah, I don't think people realize that there's very, very few people that are actually like really making the millions of dollars on social media. Notepad++ is better than Vim? What? Okay, what is it in Notepad++ that allows you to that you think gives it an advantage over Vim? You know what's funny, actually, because I've kind of been on a binge about this the last week. So I've been practicing my Vim skills every day. But this week, I've started to get into other modal editors. I forget what Helix. So the one that I was looking at yesterday was Helix, which is written in Rust. So I find that interesting, and it's got a lot of cool features. There's a lot of features that you can get in Vim with plugins and stuff, but like it's all built in. Like they have the fuzzy code suggestions, which is really cool. But it's also a little bit better than Vim, because in Vim you say like delete something, and then like if I want to delete a word, you say delete 5 words, right? So what happens, and then you hit enter and it goes, or whatever. Or well, not enter. I think that with that one, with that keybind, as soon as you hit the thing that the object, it deletes it. So you could get in and like you delete 5 words, and then you find out, oh, actually I only wanted to delete 4. Oops, have to undo it, go back, type it again, 4 words, right? Well, in Helix and some of these newer modal text editors, it's the opposite. You say 5 words first, and then it gets selected, and you can see it, and you can see, okay, yes, I did select the correct thing, and then you delete or change or whatever it is that you're going to do. So it's actually better. It's actually a more excellent text editor. But I've been getting also into the key bindings, because all the key bindings in Vim are based on like trying to make them easier to remember for the most part. And I would like to see them like, you know, the most valuable key bindings are at your home row keys. So to change the key bindings, right? To make the most excellent text editing experience that you can get. Far more intuitive. But I'm not about intuitive. I'm about excellence, right? That's the thing. I'm willing to go into something that's harder, requires more research, is less intuitive, whatever the deal is, if the end result that I can get is better, right? That's what I'm saying. And that means going into it. So I think that the text editor is the perfect example of excellence with Vim. It really is, because the reality is that you don't have to use Vim. Like, Vim was invented for a use case where you could only use the command line. And, you know, there was a lot of people would say, yeah, you want to learn the Vim key bindings so that when you're having a problem on a server and you have to edit a configuration file, you can change it, right? Well, now everything in the programming world is infrastructure as code. So you're not allowed to actually touch the actual machines. So this situation never actually comes up anymore, right? So you don't need Vim. You can use a regular text editor like VS Code with just default VS Code is great. Text, Notepad++, it works really well. Notepad++ has a lot of extra features too, though. So, but listen, you just have a Notepad. Most people probably be perfectly fine editing text in Notepad, because the reality is that editing text is such a trivial thing. It doesn't have to be done the best. You don't have to practice excellence with it, but that's why it's the best test case for excellence, right? It's because you don't have to, but you can actually do a lot to be better at it. So they're coming back down a little bit earlier than I expected, but this is just the S&P 500 open. It looks like that for the initial swing, at the very least, that they are buying it here in the S&P 500. They're approaching previous day's close, I think. Also seeing an extension of the rally in oil. They are now above 93. That may be putting pressure on the treasuries here. Excellence. And then the last one, what's the last one? Teamwork, right? On this stream, we work together. We're just little tiny retail traders. You don't really stand a chance against the big boys if you're all by yourself. So maybe part of the teamwork is kind of by necessity, but we can work together to understand the markets together and share information. And that's one of the primary reasons why this stream has been as successful as it is, right? That's what makes this stream unique, right? Integrity, excellence, and teamwork. It seems like small things. It seems like things that everybody would think that they should be aspiring to. But what I've come to realize is that actually it is a unique thing. Because especially when it comes to excellence, people these days don't seem to value excellence from what I've seen. People don't seem to value teamwork from what I've seen. You know, this is the problem that I have with the woke stuff. So it has nothing to do with, you know, on this class struggle and all these sorts of things. No, what I don't like about woke politics is that their values are diametrically opposed to the values that I have, which are excellence, teamwork, and integrity. Okay? Teamwork is not go and demonize and ostracize from society everybody that disagrees with you. That's not teamwork. That's not how teamwork works, folks. Okay? Excellence is not get rid of test scores because some people don't don't do as well on tests, right? That's not excellence. Okay. Integrity is not raise millions of dollars and for your political cause and then use it to go and buy a mansion somewhere. That is not integrity, right? But that's what I see the woke people do, right? They don't share my values. Seems like they should be like no duh values, but it's actually, when you look at the world, it's actually not. It's actually a unique approach right now. There, it looks like they're gonna go. Well, there's still iceberging at 15. I don't like this timing, but I am kind of suspect that they might breach through that. At some point, they might breach through that iceberg and continue through a little bit. Like they might get it snapped back up, but I think that iceberg is probably going to break at some point. It's quite a lot to see at 15 though, isn't it? And we've already seen 16,000 trade there too. That's interesting. U.S. alerts all Americans still in Ukraine to leave immediately ahead of expanded Russia's strikes. Oh boy. Sounds like the Russians are going to come back for retribution against that attempted assassination or whatever. I think I want to try a little, it might be too late. I'm going to try a little sim trade here in the 10-year. Because I don't think that I can make a good position here. But I do think I'm seeing pretty big icebergs on both sides here. So I think that I can probably pull some out of this. It's a nice snappy snare there. Icebergs are solid. Yeah, I mean, when was the last time that you saw two opposing 5K icebergs against each other? Wowzer, all right. 5-year is at its lows now, though. The steepening has evened out. Well, okay, so there was an uptick, was a little bit more than what I wanted. It seems like sometimes this doesn't resize. Remember my resizing here? Okay, so there's one there. I actually want two there. That was kind of interesting to see icebergs of that size. We do have a 2-year note auction today. Do you think that could be related? Think there could be a rate lock there? That's pretty much how calendar spreads are provided with liquidity, large orders, both sides for rolling traded against the listed spread. I suppose we are getting close to the rollover, aren't we? Like, you will want to roll over by Friday, right? Okay, so they are pulling for these services PMIs. It's curious that we saw so much volume in large icebergs ahead of that news. Yeah, 26 would be the start of the intent period. Yeah. 3 days before would be Monday, Tuesday, Wednesday. So the 26th is basically the last day you can trade it. The start of intention. Ouch. I didn't necessarily want to be in a trade for that news, but I thought, what the hell? So why the flush there? So the services PMI was 44.1 versus a 49.8. So worse than expected. That could buoy treasuries. I don't know. That seemed like that was a little bit more dramatic than it should be, though. Well, either way, we're flat on this. Gotta puke that. Shouldn't have done that. That wasn't very excellent of me. That was so you know what? Yeah, I was just, don't worry, it was a sim trade. Okay, but I was only trying to take a tick out there on the iceberg. I did not expect them to react that strongly to that news. I mean, there's usually a reaction, but not that big. That was a really big reaction to that news. May actually come back down. Yeah, I'm not gonna risk my money. I'm a little concerned about my focus this morning, so I'm going to, not only that, but that's like quite contradictory to the overall flow. So I'm not sure if this is going to flush up and continue through to highs and end up being a strong trend, or if it reverts back down again. I could easily see it going either ways. That's the second time I see this reaction. And I definitely wouldn't have wanted to have a live trade going on into that news unless I knew that the news was going to be really bad, like, right? Look at her go. Yeah, they've definitely got because the liquidity, again, like there was all this liquidity down below us, right? And the offers were all very light. Go away, CCleaner. Wow, I have a couple of things open that probably shouldn't be. What else do I got on? Skype? Why do I have Skype open? Oh, it's the Power Toys is what I'm seeing that's like going that usually isn't. Maybe I uninstall that because I don't really actually need it in the end. 24.5, seeing a little bit of back and forth there. I don't know. That's why is okay. So let's come to Zero Hedge and see if we got some more color on that report, because low for the FX macro says the low for the week is probably in for bonds, trade accordingly. That's curious. They think that. That is a pretty big shift, man. So let's come and look at it on the volume profile. Well, you still got 118 even above us. But geez. Not too far from that either. The S&P 500 is rising on that? You gotta be kidding me. It shouldn't be that surprising to me, but it's just a little... what's the word? It's so cynical. It's so cynical. They care more about will we get free money than anything else. Oh, now that's interesting. Twitch will now let partners stream on YouTube and Facebook. How's Flash PMI? They moved quite strongly off of it, Oliver. They moved really quite strongly off of it. I was being dumb and I had a sim trade on that I shouldn't have had, and it was the wrong way. It was the wrong way. I'm really quite surprised at how much it moved off of that PMI news. Like, really. Bob Iacino says US PMIs from the S&P are a mix of bad and horrible. So let's go back through the numbers again. US S&P Services PMI Flash, they're expecting 49.8, which would be a contraction, and they got 44.1. Is that actually that bad? I think that might actually be like really bad. Flash Services PMI. It is really bad. 44 is one of the worst numbers we've had. So like normally it's around 55. So to have it below 45 is pretty bad. We've only had 3 data points that were worse than that. And that was during the pandemic. It's going all the way back to 2014. So that is a bad number, relatively speaking. And also, it is a pretty big miss. Yeah, the book is still... I would expect that a move like that will probably strain liquidity further, right? Manufacturing PMI, they're expecting 51.8 and they got 51.3. That number is not so significant. Pretty good pullback there. Also, pretty good steepening put on today. Probably somebody put on a steepener through this whole morning and is quite happy with it, I think. Where was the yields? They were all the way up to 7. Oh my gosh. 307. Nah, I don't think the now is the right time, but we could try trading it for a continuation. I don't know if that one makes sense. What makes me think that this trend is going to continue? That the order flow that we're seeing is going to continue, especially if people seem to have predicted it correctly and front ran it. Well, we do have news at the top of the hour too. We get new home sales, right? Yeah, new home sales. Richmond Fed Composite Index. Feeling sleepy. Now I'm really feel like I probably didn't take my medication this morning. You know, I didn't sleep very well last night though. They didn't let me get to sleep until later. Before half. It's super slippery through this whole range. It's really good that I haven't taken any live trades today. Like, you wouldn't want to be caught off guard on a move like that, right? That's pretty... I've never... obviously, it must be because the number was such a big miss, but I've never seen PMIs move the markets that much. Mm-hmm. What the thing I find really curious still is the big icebergs down at the bottom, man. Because there was two sides to that. Somebody had to have eaten that, right? It was a big battle. It's really hard to... the thing that I'm kind of starting to learn is that when you get into these illiquid areas and you catch a big runner, it's usually best to just take it off, because it really is going to get sucked back in, you know? So the issue that you got right now is 25 seems like the bottom of the hole. It would be very easy for them to move down, but that's as far as the range took it. I don't think that it would be too hard for them to push it to 118 evens, but if I take a long here in the treasuries, how much adverse excursion could I potentially get? You know, it could go quite a ways against me first. The slippery market makes it difficult to hold a stop. Oh, you scratched the trade at the low. I should have scratched. I didn't realize what time it was when I was messing with that sim trade. Wasn't very smart of me. Okay. Richmond Fed came out early at -8 versus an expected -4. They are pulling for the new home sales too. Oh, this gets interesting. The estimate is 0.575. Range, you can't show strength. Well, they're gonna wait for this news first. Okay, so it is lower than expected, 0.511. Yeah, basically can't gamble. Well, when you get in movement, that can help, right? I think that might have given you a good spot to buy. I'm not gonna mess with my live account, but I'm gonna YOLO a little bit here and with some sim trades. Yeah. It's a large order in the 5-year. Maybe I'll take one off because of that. It does. Ladder above offers interesting, but there they ate through that in the 5-year like it was nothing. 2s and 10s is flattening back out. Ooh, look out. 2s and 10s flattening back out. I am feeling sleepy for whatever reason. This is a good... Okay, so I don't like that. I'm gonna take another one off. I don't like seeing the stacking there. Seems unnecessary. Man, silver and gold are skyrocketing, and the dollar getting hammered down below 108.5. I was sleepy all day yesterday too, but wasn't trading. Yeah, I don't know what my deal is. I just feel like relaxing and taking a nap, though. Level break setup here at 31 is an interesting income out in there if it slipped through. At least for tech. Still looks, liquidity still looks difficult. Oh man, so I didn't realize. I only looked at the headline numbers, 5.511 for new home sales. But the new home sales changed over month? They're expecting a negative 2.5 and they got negative 12.6. You know, we were all looking for the Federal Reserve to be, you know, super hawkish at Jackson Hole. But the reaction to this market says to me these are significant numbers. This, like, it's changing a lot of people's expectations here. I think that there's going to be a lot more expectation of the Federal Reserve being a little bit measured. Like, the issue is that we don't know what the next inflation numbers are going to be. I would not expect, I haven't seen anything that would say to me that the next CPI numbers would be bad, right? So I think that probably, wow, they just blew through 118, man. I think that we're in a perfect situation to see a big pullback in bonds. Now, interestingly enough, the 10-year is only just now getting back to 3. These are pretty massive ranges. Look at that. Still reloading. The long 01. Maybe for a scalp. I don't know. With the way this is trading, it does kind of look like it's going to turn into you could take it anywhere, right? Look at that. Yeah. I'm not going to say it's excellent positioning, but I think you are going to make money on it in the end. I'm just going to let this last contract ride. Now that they're at 3% in the 10-year, I'm kind of wondering if that requires action on my part, but So the S&P 500, they rallied after the initial news. So far, they haven't continued up yet. They're close. They may go. I'm a little skeptical about. Yeah, I think that probably bad news is good for equities, but I'm a little bit wary about how far that one can actually go. Because ultimately that would kind of suggest that the S&P 500 has to sell from here, right? You think one will hold? Oh, I'm not so sure about that one. I think that if I really wanted to have traded this, I don't remember what prices we were getting, but like, the best way to have played this would have been to have just taken a swing trade wherever you could have immediately after the news, and then you're just trying to let it ride. It becomes more and more difficult to predict what will happen with the volume. This is an almost 25K net buy change in the treasuries. I am getting a bit of clickiness up here and some large trades. We're well above, like we're reversing a lot of yesterday's levels now even. Although 08.5 is probably the next significant stopping point. Yeah, the way that that's trading is kind of like, I'm not too confident about being able to catch a good spot, but that kind of screams continuation to me. Your last two? Well, you got, I don't know. Oh, don't fade. Well, I'm kind of looking at this and asking if I should be going short 3 in the 10-year. I actually think that I could get better than that. I actually think I might be able to get 3.01. But I'm asking myself if that trade really makes sense. Man, this is such a wow. What is the best way for me to say this? PMIs, shock markets. It's bad. I have not seen such a clear, absolute reversal in the whole market quite like that. I can think of a couple of days as of recent where we had high volatility, and you know, you could have been in like a trade making 100 ticks and have it come all the way back on you within a few minutes. Like that's definitely happened. But like, to see like that the whole market sentiment is just completely flipped around here it's very jarring. It's very jarring. It's just such a dramatic change. After initially steepening quite a bit this morning, the 2 and 10-year spread is flattening back out hardcore. Man. There had to have been somebody on the wrong side of that trade. I do see some people taking it at 3 in the micro. Piece of tape has dropped off considerably. Time to break low. I'm curious to see if the S&P 500 shifts at some point or if it just trends all day. Given the economic situation, if we don't see inflation before the next Fed meeting, there's no way it's going to be a 75 basis point hike. Right? Which would put us at 2.75. And maybe nothing after that. I'm having a hard time. My eyes want to like cross because I'm feeling sleepy. Is that a thing? Why does it seem like when you get sleepy that your eyes kind of like, you go like cross-eyed or something? What's with that? Yeah, 3%, it looks okay. I'm not so sure. Well, man, that is such a strong trend, man. Wow. It's already been 15 minutes. Plenty of time to have jumped on that if I had wanted to. I don't think that I was prepared today, man. He's pushing hard, but not sure they have enough at the moment to make a new high. Seems to be struggling just a tad. Nord Stream announced Nord Stream will not be carrying out 3-day maintenance at Port Davia compressor station announced by Gazprom, as that lies outside of the area of responsibility of Nord Stream. It was an insane move, Lafta. Oh, my dog is barking. What's your problem, dog? What the heck is the dog on about? The dollar, by the way, fallen quite hard. I mean, it's been a really big rise here. The dollar might be your better trade. So you're just talking about the yen futures. That's probably a good spot, but the euro, probably euro makes it back to parity after this. They've got a little bit more room to go. Iceberging at 04.5. $6,500. Shoot. Is that going to be a 10K iceberg at 04.5? What? You have a monitor dedicated to watching a live webcam at a beach bar in the Virgin Islands. Why would you? Okay, whatever. And then 2 gunmen come in and rob the place? That's crazy. Denver's not moving. Well, so here's my take on this one right here. So again, that 10K looks really significant, right? That 10K looks very significant. I don't want to take a trade off of that 10K. Okay, because that's look at how much volume that is compared to everything else in there, right? That is a real strain on the liquidity at that location. Market makers aren't going to be able to provide a whole lot more liquidity, and it was already like a really impulsive move. So the most likely scenario from this is that they start rotating around 04.5 rather, with a possible leg back down to 118 even. So that's probably the high for the short term. And even if they do push back up to the high and break it, I would be really wary about it coming back to that 04.5, because that's going to be a massive hole. Look at that, 13,000 now. That's not a place that I want to transact in. You scratched it. There's just too much volume, right? We don't want to be, when the big guys are really making their moves, I don't necessarily want to be on the other side of that, right? I want to have been in before that all happened. Like for this trade, I think I could have gotten in immediately after the news. They didn't, because I'm a pansy, but I don't feel like top of my game here today to be putting risk on. So I just kind of waited and was like, okay, what's going on? I really did not expect it to come up this much, man. There's no way that I would have predicted that those numbers would have been that bad and would have had that much of an impact on markets. No way. So to be the informed trader in this situation, kind of hard, right? You could trade immediately after the news. That's a risky proposition, but in this situation, it would have worked for you. That came back. That maybe they are going to go back to 118. Okay. So sometimes when I feel a little bit sleepy, I'll be like that, and then it kind of passes. But here I'm talking to you guys, I'm active, so I'm gonna go. I definitely did not take my medication. I'm gonna go and do that and try and get my chemicals equalized. Okay. It's 8:22. I don't. Well. Whatever. I'm gonna do it because I don't feel very good at the moment. PMI and new home sales down, not a recession? Well, I'm not too interested in that argument, to be honest with you. So you know that the technical definition of a recession, for starters, it is decided by this board. But the other thing is that there's like a time frame that they look at. So that the time frame in which it would be 2 negative quarters hasn't actually been hit by them. So technically for them it's not a recession, but with the way that this is going right now, by the end of the quarter it will be. Right? But the more interesting question is, how does this change the Fed's calculus? Right? They're still very concerned about inflation. Well, I should expect to see some deflation in the asset that had the biggest bubble from all of this, right? Yeah, I think so. So I don't think that it's too significant that the housing number went down, although it does have a significant impact on treasury debt. I'm not saying that the move wasn't justified, but that particular data point isn't as interesting to me. The PMIs, though, that was a very, very poor PMI. Services PMI, that's a terrible number. That's a terrible number, right? Depends on what the core PCE comes out with on the 25th. Well, yeah, but remember that before the next Fed meeting, well, actually, this is interesting. Because we do have Jackson Hole. What are they going to say at Jackson Hole? I was going to say that we have another set of CPI before the next Fed meeting, right? So the heck is my dog barking at? Sorry, I just don't like my dog barking. I don't want him to learn to bark like that. And I've been doing all this work to make him not bark, and he still doesn't. I can't win. Should just give up. This is a strong pullback. When I sat there and I said the most likely scenario from here is that it either rotates at 04 half or it goes back to 118 even, that was an incredibly prescient prediction, and I'm really shocked at how effective I was able to call that just based on the liquidity, because I'm kind of looking at this as like what just happened there could create a trend day. So to see it come all the way back to 118 even, that's enough of a pullback to kind of make me question that whole trend day narrative. I'm not so sure that I can really take a trade in all of this mess, but Dad, that's all the language I know is barking. I know. Well, he whines too. Like, here's the thing is, when we first got him, what a whiny dog. It's like if I put him in the cage, like so loud. It's like somebody's like torturing him in there, is the way that he acts. If you put him in the cage, it's like, it's torture. It's torture. I put you in the cage every day, dog. It's not torture. Chill out. Chill out. It's just a yippy dog. You know what? When I should have known better. When we went to see the dogs, and pick one, the mom dog basically was, pawing at your legs, and barking the whole time. The whole time. No, it is a Papillon. And mom had her voice softened, so she could still bark, but it was like, okay, that should have been a warning to me that lineage had some barking problems, you know, because I did everything that I could to try and prevent him from barking, and he does it, and he barks quite a lot. I'd say it's not like as bad of an issue as it probably could be, but he barks more than most dogs. So here's the funny thing, is like the way that it started is like he'll look outside and he'll see something, or he thinks he sees something, and he starts barking. Like, that's the thing, is that I think sometimes it's just bored, and he's like, oh, I'm going to pretend to see something outside and bark at it. That's how I feel like he's acting. So we got some of that like frosted window tint sort of stuff that is like a plastic vinyl that you put on so that he can't see out the bottom of that window. And the first time he's like, oh, I think I see something outside. He walks up to the thing, and then he's like, oh, I can't see through it. I guess I won't bark. You know, it was kind of like he begrudgingly stopped barking, right? So then guess what he does? He starts pawing at the window, and he figures out how to take it down. Starts barking again. So I put it on the outside of the window, and because there's like a step down outside the door, he can't like get up high enough to try and pull it down from the outside, because he tried. I've seen those. Yes, he would make a good purse dog. He could, I don't know, probably a Pomeranian would make a better purse dog than a Papillon, to be honest with you. A Papillon is the right size, but a Papillon is very, very active, and I think that it might be a little difficult to get him to sit in a purse for a really long time, because they are really active dogs. But Papillons almost always win the agility competition at dog shows for small dogs. The winner is usually a Papillon. I've been teaching him yesterday, you know, I've been having a little bit of trouble teaching him to go through hoops, but now like he's older, 6 months, and he just does everything like the first time. It's so easy. They aren't called Continental Toy Spaniels for nothing. There you go. Yeah. It is kind of interesting, like, so when you think about that, you might say, oh yeah, like all toy dogs, they must all be related or something, but they really aren't. Like a Papillon is a Spaniel. Because my wife was like, he looks like a Chihuahua. They're not anything even close related to a Chihuahua. Any similarities in look is just like a case of convergent evolution, is my understanding. I'm really kicking myself here. Like, I really want to take trades real bad because I can see the volatility, but I really don't think that I should be. Getting up there, I think, really helped. I wish that earlier I had done that, because maybe then I would have felt more confident about getting into something and could have made a little bit of money off of this move. But it's okay, because if this is going the way that this market suggests that it is, and of course we could get like a really contradictory data tomorrow, or the Federal Reserve could say something really contradictory at the end of this week. But otherwise, I'm kind of suspect that we see a big rally in treasuries. Like, let's try and game this out. Yeah? Let's go to a daily ZN chart. I think that the piece of news that we got there was more significant than the stuff that we got on like the 21st of July. What news, what day was that? Let's come back here real quick. Come back over here. So it was last month by 21st. What was the 21st? Was that the Fed meeting? No, that was Philly Fed Manufacturing Index was a big disappointment. That was, am I getting that right? 721. That was just off of the Philly Fed. No, somebody said something. Maybe it was. Well, anyways, so coming back here, I think that this news is pretty significant. So I think that not only do we get a reversal day today, but I think that we could have a trend that takes us up to this 200-day moving average. So probably somewhere in the area of 122.16. Do you take a long at 03? I think that maybe it would have been worth it to put some liquidity at 118 and have bought it. That's what I'm kind of regretting not doing. I thought, well, they might go back through it, so maybe I could get 3025 or something like that. But it actually looks to me like the volatility is still a little bit higher than I thought. Anyways, this moving average, yeah, I think so. I think this is going to flatten out and you're going to come up to here. And that would probably have us at like what, 2.5? I was watching horse racing on TV. The market this morning was like horses walking up to the gates. News came out, horses were off to the races. Well, I don't, I think it was a little bit more than that though, Lafta, because like the thing that I thought was the most interesting about this move was that there was a massive set of iceberg orders down at 15 and 15.5. Like I was trying to take ticks between those two big icebergs because there was like 10K on both sides of it. So what was going on there that they were making that big of a transaction just before the news? And we had already seen a significant amount of steepening flow coming in. It looks like that some people really got buried by this news. Like there was the way that I see it is like there's some large trader and they're selling either because they're speculating that the Federal Reserve is going to be, you know, that the market's going to be hawkish until Jackson Hole, or you know, they in general have to sell some things, right? And they're not expecting the PMIs to be a big deal because the PMI is like almost never a big deal. And then the PMI came out and whoever it was that took that was like, crap. Like somebody got like super screwed on that trade, man. I think that's an important point to note. Like that's the sort of thing that can really make this like he can really get a significant pivot because people's expectations are changing big time here. Well, there's 118 again. I guess I would have done it. Oh yeah. Can you imagine? Like again, it was like 15,000 contracts. Like that's a ton. And then the news came out. Like what? And then the other news came out and we took another leg. Oh, they jumped back up there really quick. I look away for 10 seconds. It's probably too late for me to take a trade. I really want to go short at like 3.02. Dog, stop barking. Stop barking. Arf, arf. Arf, 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 arf. O2 looks okay. I think I'm more allergic to cats than dogs, but maybe if I had a bald cat, I could make it work. Because I'm pretty sure I am allergic to the dog, in fact. Why are you barking? What is it? I'm gonna go look. Is he just staring out the window? I don't think he's actually barking at anything. You need a larger dog? Can you hear me when I go out there? I forgot to turn the microphone off. She wants a larger dog. Ugh. She spends too much time looking at dogs on the phone. You need a new hobby, honey. A 1. The S&P 500 is rolling over here. This frustrates me a little bit when I feel like I'm making good calls, but I'm afraid to put the risk on, right? Because I did the same thing in the S&P 500, right? I was like, well, I mean, it looks like they're rallying. Maybe they trend all day, but I kind of suspect that there's a certain point at which it's going to be like, oh yeah, we can't rally because the economic numbers are actually really bad. And first there's going to have to be a lot of pain before you actually get the stimmy money, right? Get a shepherd or a mastiff. No. No, I don't want a big dog like that. Like before she had Yorkies, so she wants a dog bigger than a Yorkie but smaller than a lab. When's the market gonna catch up? Your negative spreads 2/10. I don't know. It's kind of funny to me that it's like when the market expects that the Federal Reserve is going to keep interest rates higher longer, that's kind of resulting in steepening. But then also here, the market thinks that the Federal Reserve is going to have to back off of interest rate increases. We also see steepening. Now that steepening happened much more in the 30-10 year end of the curve. The 2 and 5, sorry, the 2-10 spread flattened hard. I guess what I'm saying is that when you're trying to look at what will spreads do, we want to have this natural inclination to try and categorize things and say, okay, here's a bear steepener and here's a bull steepener and here's a bear flattener and a bull flattener, and like what are the different economic conditions that create each of those. Now I can go on like a longer time frame and I can see those, like when I'm looking at like monthly time frames in spreads, right? But when I'm looking at it from day to day and I'm trying to predict what the spread is going to do day to day, it's like it's way more complicated than that. And it'll make sense when you go out into why are they buying in this area and not this area and everything, but it's not consistent. This is not a simple framework to do that, and I don't know exactly how I enumerate it all to people about what the spreads will do, right? But I think in this situation, what you're going to see at some point is the Federal Reserve backs off and says, well, we're not going to raise interest rates anymore. We're going to keep them below 3%. That 2-year is going to get creamed, right? That 2-year is going to get creamed. And that means that you're going to see a really significant steepening. But for now, the market seems to be uncertain about or skeptical that the Federal Reserve is going to back off of its rhetoric, at least in the short term. So pending home sales should suck tomorrow as well. Yeah, there's also another form of complication. There's also multiple spreads, that tux and the cash spread, and all three have different ratios. Yeah. That's why I really like the doing a spread trade in the micros, though, right? It at least removes a degree of complication. You still have to know which way it's going to go, so I'm not 100% sure what the best approach is to deal with spreads. It seems like that there is like a really obvious trade that a retail trader should be able to consistently play in the micro treasury spreads, and I'm just not aware of it. That's what I feel like. I feel like there's this really obvious no-duh trade that I could just have on all the time, and I'm not doing it because I don't know any better. That's probably not the case. That sounds a little bit too fantastical, but these spread traders, they do something. Like, there's a reason why spreads are popular, or are how do I put this? I mean, spreads kind of have a special place in the trading world, you know? I don't know why. I don't remember why you thought the micros were bad. The reason I think the micros could be bad is because you're not getting good prices in some cases. But what I'm finding is, like, so if we're having a move, yields are moving down, for instance, which side of this spread is more accurate? It's the one on the side that's the direction it's going, right? They're moving down, then the 16 is going to be the one that's the good one, and the 3.127 is bad. So that if you want to try and take a contrarian trade with a market order, you're going to get screwed, right? And so if you're giving up a basis point on both sides of your spread, that's not very good. But it seems to me like that there are some periods where when you really need it, the spreads can come in and you can transact. So thanks for your long call before the news. What was I say, long on the E-minis? Oh, I don't know. I made some calls, but I don't think I made the call that you think I did. You use Excel. So here's my question, Akshay. The thing that we're still trying to figure out is like, can I calculate what the basis should be? You get what I mean? Like of course I can look at what the basis is, and I can probably do like some sort of historical comparison, like, you know, graph out the basis every contract and how does it tend to go, and there's probably a lot of seasonality to it, right? But can I come in and say, based on the current supply supply and demand imbalance and how far into the futures contract we are and current volatility, this is what I should estimate that the basis will be? This is what I would like to see. I don't know why anyone would trade size when you're almost certain to slip on the accrued in the cash bonds, given the spread that's inherent to cash bonds. No, so I don't completely agree with that. So if you're trading in news, then for sure, okay. If you wanted to come in and buy 25-year treasuries right now, then yeah, there would be some problems, right? But I bet you that I could get 25 years at a good price here. So I know what direction they're tending to go is down. So I know that 11 is probably a more fair price. So if I come in and I put a 20 lot and I bid it at like 3.115, the market makers would probably fill that order. I've seen it. I see it happen all the time. The spread will come in, they accommodate the order and they transact it, and then things return back to normal. So I think that the liquidity providers are sophisticated enough to be able to deal with that, just as long as you're not having to market order into it like panicking. But if you're doing swing trades and you're executing things correctly, you should be able to get okay prices right now. And it will continue to improve. But, you know, here in the treasuries, you can see spots where they are able to trade 100 contracts in the 10-year all the time. And I've seen them do 50s in the 5-year. It's not very common. Doesn't look like anybody's traded the 5-year today. It was kind of funny. It's like, oh, why would I trade the 5-year when I can trade the 2-year? Five-year is just not loved. Well, it's about time for me to get going. I think part of why I'm so tired today is because I worked out hard yesterday, and then because they were like messing with hair and stuff last night in the bathroom, I wasn't able to get to sleep until like 11:30 or something, and we talked and ugh. So yeah, I think, you know, I'm really glad that in the end I sat on my hands here, because what I think I would have been likely to have done is I think that what I really would have done was get short somewhere around, where would it have been? Let's say 19. I think I would have gotten short 19. I'd be trying to let it ride, and then I would have gotten caught up in that and taken a loss. Or if I hadn't have done that, I would have missed like Like another thing that could have happened to you is like you get long at 28 and got to pull back and panic before seeing it move higher, and then you really would be like tilted, right? So I could see a lot of places where I might have gotten caught and wouldn't have gotten the best price. Like I've been really anal about the prices and the timing of my trades. They didn't really line up today. Now, I think that on a day like today, you kind of have to split the difference a little bit and take on the risk. But if I'm not feeling super great and I'm not confident of my read, then that double justifies not doing anything. So it was in the end the right choice for me, at least. But I hope that some of you guys took some trades. It sounds like some of you guys did and did okay, yeah? Did any of you take excellent trades? This is you're gonna be hearing this a lot. Excellent. Some of my new favorite word. Because I don't think that that's my older children's problems. But I don't think like that's, you know, the things that I'm concerned about with my older children. It's not excellence. But I don't think that that's the thing that I can see that is like, this is the thing that I need to teach my younger one. And here's how I teach it. How I teach it, I think, is kind of sucks, because I think a lot of it is, okay, how do you be an excellent parent? And I think a lot of it will have to do with, you know, how on top of the schedule am I? How on top of keeping the house clean am I and stuff? That I have to work harder. That's going to be a little bit more tired, Seth, here. But excellence, always. That's what's going to, I'm learning something about myself, right? So why is Seth the way that he is? Because I'm not chill. Sometimes I'm chill, but I don't think that I'm the super entertaining like, what's the person? They always say, you got to be genuine on social media, and that's what people are gonna like. No, I'm not the fun. Not always. What's the personality that I'm not showing, maybe, or not focusing on that people should see that will attract them to the stream? It's excellence. I have a strong sense of excellence, and I never thought of it that way. I never thought that was the thing that was driving me. But in the end, that actually it is that if I'm going to do something, I want to do it the best, right? I choose to trade the Dom because it's the most excellent way of trading. I think that's an important point. I hope that you guys, especially if you're new, that you find that encouraging, motivating. That yes, if I'm going to do something, I'm going to do it the most excellent way. Excellence doesn't guarantee results, okay? But it gives you the best chance of getting results that you can affect on your own, right? You shorted L3? You could probably take a little bit out of the middle here, but I don't know. I think that if you're going to continue trading here today, guys, I would be keeping an eye on that European close that tends to happen. I'm not sure where they're at right now with daylight savings times and everything, but at about 11:30, you typically do tend to see a change in the markets. We'll see. There's a possibility that the treasuries take another leg up, maybe then or maybe after lunch. But for the time being, you're probably in chop. So be very careful about what prices you catch, right? Don't be like trying to buy the top of the range, for instance. So I'll leave you with that. Stay profitable, friends. But really, it's not that. It's stay excellent, really, is what I should be saying. Huh? So stay excellent, guys. See you tomorrow.